Oh hey Caveman, what are you up to? Trying to figure out stocks now that I need money. I can help with that. Stocks are a portion of the company that they sell off so they can raise money without taking on debt. Stocks can also be called shares. Why would they do that? If they need more money to expand the business, research and develop new products, repay debt, or to make money for their current owners as they can sell the stock off to make money for themselves, are all reasons why they would sell stock. Okay, that makes sense, but why would I buy a stock? You would buy it to make money. There's 3 options for making money: long, short, and dividends. Long is buying at a lower price and selling at a higher price. For example, you buy a stock for $10, then sell it for $15 to make $5. Short is the opposite. You borrow a stock at a higher price and sell it. Then you buy the stock back at a lower price to return it. For example, you borrow a stock worth $10 that you think will go down. So you sell it and then it goes down to $5, so you buy it back and return it, netting you $5. Dividends work differently. For stocks that are more stable, to get buyers, the company will pay out a cut of the profits in the term of dividends. For example, Coca-Cola is $78 and pays a 2.74% yearly dividend. So they will pay you 53 cents every 3 months for a total of $2.12 every year. The best styles for long-term investing are going long and dividends. Okay, but how do I buy stocks? All publicly traded stocks that can be bought or sold by anyone can be found on a stock exchange, also known as the stock market. There are many stock exchanges, but the most popular is the New York Stock Exchange, NYSE. To buy and sell stocks, you need a broker, which there are a ton of online brokers that are both free and paid. The main difference is the paid brokers are slightly faster and have better tools. Okay, that makes sense, but how do I know what a stock is going to do? Stocks move because of supply and demand. Supply represents the sellers and demand represents the buyers. When demand is high, the price is up, and when demand is low, the price is down. This is because when more people want an item, you can charge more for it. The opposite is true for supply. When supply is high, the price is down, and when supply is low, price is up. This is because when you can only buy something from one person or company, they can control the price. Okay, but how do I find the supply and demand? That's easier said than done. There's 2 ways. You can either predict the future or look for a catalyst. A catalyst is just news that will drive supply and demand. This could be an earnings release, a product launch, or anything that would affect a company. An example is Company A has created the cure for stomach aches. Safe to say the demand and the price will go up. Okay, that makes sense. Now let's see if I understand it all. Stocks are part of a company that they sell off to raise money to expand. To make money, there's 3 methods. 1, long, being buy low and sell high. 2, short, being borrow at a higher price, sell it, and return it at a lower price. And 3, dividends. The company will pay you a cut of the profits. To buy stocks, you need a broker to buy and sell off the stock market. Stocks move by supply and demand. Demand is the buyers and supply is the sellers. Demand relates to the price and supply works opposite with the price. And look for a catalyst, which is news for the company, to see what's happening with supply and demand. That's perfect. Last thing is stocks can be very risky, so please be smart. If you have anything else you would like me to explain in a simple way, please leave a comment below and subscribe for more videos like this and more in-depth videos. Thank you and see you next time.